You both are, yeah.
Yeah, I can
Right.
go. I think 0x Minion is not here yet. Not sure.
Yeah, I'm here. I just
Oh.
need help with screen share. So, because I'm on my phone right now.
Okay, yeah, go ahead.
Do you want to go first or I go?
Confusion.
Yeah, I can go first.
Okay.
So sorry, I don't have a slide, but I'll just
Yeah, that's okay.
present it. So so the project that I want to talk about is Lido, which is kind of similar to the project I was mentioning here before on liquid staking. So very often, like when we choose what to invest, we try to predict where the market's going, what sort of narrative it's forming in the future. So I think back in April or May, we sort of think about, what's the impact for EIP 1559 and what's going to happen for ETH2 upgrades. So, and turns out the upgrade was, almost as big as like Bitcoin halving, right? So we try to see, what sort of bets that we can do around this area. Oh, and a disclaimer, we are an investor in Lido. So we think that, with ETH becoming a better quality assets, less inflationary and then eventually deflationary, and becomes a proof of stake. I think people are becoming more bullish on ETH, and with that, people want to sort of like utilize their ETH in an efficient way. So we're quite bullish on liquid staking. So we try to look into this area, and we see that Lido back then was the top. It has the highest market share on liquid staking, decentralized highest market share for decentralized solutions. So I think the highest one back then was like Kraken, staking on Kraken, but they don't have like the wrap tokens, right? So I think right now they might be higher than Kraken. I'm not too sure, but right now they are probably I think 85% of decentralized liquid staking market share, and probably like 20% of all ETH2 staking market share. So yeah, the project is pretty simple. It's nothing too technical, it's nothing too complicated. It's basically just you stake your ETH on the beacon chain, and then you get a wrap token for called STETH, and then you can use that STETH for all kinds of stuff, for yield farming, for trading, or whatnot. And I think we're quite like Lido, because we think that the liquid staking market is something that's like winner takes all. So if Lido is the one that sort of take all the market share, we'll just continue taking all the market share, given that the more DeFi project, more exchange will support their liquid staking tokens. So I think it's just going to snowball from here. So that's why we really liked the project back then. It was quite an easy, simple decision. And we also quite like the fact that their model is quite simple. So I think they take 10% of the staking reward, and it goes to, and half of them, and then it goes to the DAO. And then and the DAO, they have the ability to build the product, build the community, do BD, and also provide insurance if anything happens. And in the future, the DAO might be able to even vote for some sort of like value accrual, some revenue fees go back to the Lido tokens, but that's not implemented yet. Could see that in the future. So yeah, we think the narrative here is really strong. And also they will be launching, ST Sol. I think that's the next one, the pipeline. They already have works with Luna as well. They'll probably like integrate other all POS chains. And with ETH2 coming, I think that just opens up like billions of dollars, like multi-billion dollars of TVL goes to Lido. And I think the token can really be seen as a sort of like layer one index, or like a governance layer for a lot of POS chains, and that can be a fraction of combination of all POS chain that's staked on Lido. And I think that's a very, very powerful narrative for this market. And I think moving forward, like I personally really want to see like FTX. I've been trying to get FTX to support like STE, ST Sol as well. It's just like especially as a collateral, that'll be like super good, because you can get the first thing, like you don't have to worry about the staking on Solana. You have to there's like 7 days withdrawal period and ETH as well. So I think being you can have that liquid staking token, trade, you can use on FTX as collateral, and you can start trading with that. I think that's very, very interesting. So yeah, I think this is a very, very long-term project for us, long-term
Yes.
investment. So yeah.
I was surprised that I have been I ICO'd like Rocket Pool.
Yeah.
And Rocket Pool, it never took off. I don't know why. It was like 3 years ago, or even they have like pre, and they wanted to do all distributed, but maybe their product is just too complex. I didn't check. I don't know what they are doing right now, but somehow it's like an investor of the competing earlier project. You think, it's like the new kid on the block, and it was relatively fast. They have grown to they took the market share quite fast, Yeah. But somehow, as you said, maybe they have just the more simple product, because the Rocket Pool should be like like some decentralized infrastructure then is running like everything, And I guess I don't know Lido so much, but I think somehow it's like with the multi-signature, or how is the security? It's not decentralized, I guess.
At the moment, it's not. It's basically just a DAO with like I think like 11 people holding the keys.
Okay.
We saw a lot of others like liquid staking projects, but I think like no matter like how good their product is, like Lido has the sort of like the advantage in market share. It's quite a simple product, so it's quite easy.
But somehow you see this decentralization is can also very hold you back in your design of your software somehow.
Yeah.
Myself, I have like some of the next, or I think decentralized infrastructure will be maybe very common in the future, but I don't know the time scale, just because it's very hard it's not easy to do, You had a lot of problems. We see it with like Rocket Pool. And I sold too early, like every time.
100%.
Yeah. Other questions? Dao, you are in a similar.
Yeah. Hi, Brian. I have a question regarding Lido, because we're actually looking a lot at these liquid staking issues. I think the problem is actually, if you actually look at the POS landscapes, right? People are very wary about centralization in terms of the validators, right? For example, people are really totally against Binance because they naturally have a lot of monopoly on the POS staking business. You look at like Cosmos, Polkadot, and all these other POS chains. Binance naturally become a top validators and sometimes have a veto right in terms of the consensus. So I think for Lido, what is the upper bound of the market it can actually get within a network? For example, if actually it controls, well, I look at Lido as a liquid staking aggregator, right? It's similar to a YFI in terms of liquidity mining. But the problem with an aggregator in a POS network is that it actually creates a centralization risk. Single point of failures, right? So for example, if the operation on the Lido side have any failures, I think there will be a huge impact or security risk for the Ethereum network. So I don't, that's why I think for validators, naturally their market share is not going to go like exponentially or predominantly within a network. Probably will be capped at a certain level. And that naturally will actually cap their potential. To be able to have a unlimited sort of potential within the networks. I don't know how you guys look at this, the limitation of a validator network within a POS network, because I think it definitely creates a lot of security risk from a consensus perspective.
Yeah. So you're saying like there's like, let's say like too many, like Lido taking too many market share, and they just have too much power over like
exactly.
POS.
Yeah, I think you already have more than half of the staking of each 2.0 staking market shares.
Yep, I see. I guess I see your concern too, but I think so far their DAO has been working like quiet, like in a decentralized manner. I do see like they implement some change in that front in the future, but yeah, I'm actually like, I actually don't have a perfect answer for this as well. think like Constantine probably like would consider that if they grew too big for all the chains that they work with.
Yeah, I guess this is really a topic. We will see how this plays out, at the end, because it's difficult. Myself, I'm also more on the decentralized side, and somehow I think it's strange that then a big entity has this kind of market share of these proof of stake chains, because at the end, I think you need 2/3 to. You can attack maybe. It's not on you don't have the. It makes no sense to attack your own network somehow, but it's somehow maybe it's if you see the fights now or some fights with the miners somehow, we had some resistance to the lately change of the gas burning, and then so maybe they also have they build so much power they just can resist certain developments in the future maybe. But yeah, nobody knows how this is playing out. We will see. Yeah, thank you. So we have the last one is Minion. It's a French. I don't know. Is it French? No.